Hi everyone, welcome back to Be Rich. Today, further on how to invest and how you can create returns on your investment, I thought me and Sashwath will dive down further about this famous argument which a lot of investors have. Should you do SIP or you should do lump sum? So we thought we'll do compare and contrast and give you the secret sauce if you should be sipping or you should be lump summing.
Lump sum. Yeah.
So anyway, Shashwat, so why don't you start us off with sipping? What is all sipping all about, man?
Yeah. So first, I want to give an expansion for what SIP is to people who don't know. That's systematic investment plan. The name already tells you what you might expect from this. One of the biggest advantages with sipping is that the way it works is every month you put out a certain amount of money and you can automate this. So a lot of people have a problem with remembering because they're so busy with their careers and their 9 to 5 jobs, and some people go even earlier and come back home even later. So what ends up happening is investing is not on the top of your head, and at the end of the month when all your salary has been spent, you sort of then remember that, oh, I should have invested, and now my money is not there anymore. I'll do it next month, next month, and then you sort of forget it. And now what is a way in which you can do this is you can automate it. So sipping can happen where as soon as your monthly salary is credited into your bank account, you can debit the exact amount of money. Let's say 500 rupees per month. You can start very small. 500 rupees per month. I'll take a passively managed index fund with low costs, which mirrors the Nifty 50, and I'll put my money into it. And I want this to grow over the next 20 years so that when my retirement comes into play, I will have a huge amount of money to rest on. And that is the fundamental idea of sipping. Can you talk about lump sum?
Yeah, lump sum is the exact opposite. Exact opposite in the sense that you get one lump of money. There could be like your bonus you got, or some inheritance you got, or some land sale you did, and you've got some money in your hand. And instead of saying, okay, I'll take this money and I'll divide it into 12 months, and every month I'll put little, or if it's a huge amount of money, I'll put little over 3-4 years, instead of slowly building it up like that. You say, no, Baba, I'll put the whole lot into a fund, the whole money, lump sum, and it will be there, staying there. If it's a growth thing, whatever returns come from that, it will be reinvested and keep growing. If it's not a growth option, you'll keep getting yearly dividends on it,
Yes.
and that units will keep growing if it's in a mutual fund. This is the advantage of a lump sum, where you invest one time and you forget about it, and returns keep coming or it keeps growing, depending on which option you take. You don't have to worry about it after that. You've done your investment, one shot and you're done. Instead of worrying about sipping every month. The problem with sipping is a lot of people, what they do is they overestimate their investment option. Meaning that when we talk about sipping and you talk about how much returns you can get, then you think this fanciful dream you have, okay, 10 years from now, I'm going to have 5 crores with me. All I have to do is put half my salary in a SIP every month going from now on. Then somehow I'll manage. They start doing the first 3-4 months, they sip it, then after that it just gets too difficult because they've been over ambitious. And what happens is, if you've been depending on the product you have taken and the way you have set it up, you may lose out, because some of these sips are time committed, meaning you have to say, I definitely will be sipping for 2 years, I'll definitely sip for 5 years, and you're stuck in that amount. And if you do not pay that amount, do not get a guaranteed return. And if you want to get your money back, they will discount it and they'll penalize you, and you will only get half of it back, or a little bit less than most of it back, which depends on the product again and what you have sipped into. So this is a problem with sipping. What happens is people get too aggressive when they're making their bets. And our advice usually from Sashwath and me when you're sipping is to think of, let's say you have a household and you have a driver or you have a cook or you have a servant. You imagine your SIP to be another person you're paying salary for. So let's say you have a servant and you're paying the servant 4,000 rupees salary. So your SIP starts at 4,000. If you have a driver and you've been paying the driver 20,000 rupees salary, then okay, you can SIP something more aggressive, maybe 15,000 rupees. You can say, like, I have a driver, I can afford to SIP 10,000, 12,000 rupees. So to think of it mentally like that, like you're hiring someone and you're going to keep them on your payroll, your SIP is on your payroll and your household. And then it kind of makes sense to you. Rather than thinking of what I'm going to get 10 years from now, what am I going to get when the SIP fund comes to maturity, which is how they're sold to you. Most guys who sell SIP will say, sir, if you just put this money 10 years from now, you can retire. Every day, every month, you will get 5 lakhs. They do not tell you to get that 5 lakhs, you have to aggressively keep putting every month, which gets too much for most middle class and upper middle class people. So be very cautious when you SIP. This problem is not there in lump sum. The advantage in lump sum is you put your money. Let's say you have 5 lakhs, you have 10 lakhs, whatever you got your bonus. You put it and that's it, you're done. So Shashwath will talk about the disadvantages of lump sums.
Yeah. So lump sum, the idea is that you put your lump sum when the market is at its peak. What ends up happening is it might be a great investment. You might have entered at a great price, but yes, markets do crack at times. When they slide, they slide. They slide by about 3-4 PE points. And what ends up happening then is that you get very disheartened. In your own mind, you think that you've already burnt your hands. Although you're trying to invest for the next 30 years, you're not going to even look at that money for the next 30 years. But you look at your investment app and it tells you that, boss, you've lost 20% of your 2 lakh bonus per annum which you've gotten. It does hurt a lot. And it disengages a lot of people from investing. And that is extremely unfortunate because investing is a crucial habit which you need to be able to retire early. And you tend to see all these price fluctuations, and it hurts even more when the amount is a huge amount, like in lump sum. And another flaw with lump sum is that I wouldn't say a flaw, but another caveat with lump sum is that when you do invest your lump sum of money, you lack the nuance in terms of opportunities, because
Correct.
at times when you do invest, there are 1 or 2 good opportunities, yes, but you don't get to put your eggs in different baskets. You have to put your eggs in a few opportunities which are available to you then. And that may not be something which most people are looking forward to, because people generally like a large collection of things, a large buffet of things. You want to have a little bit of everything. You don't want to put all your money in one opportunity and then just sit with that for the next 20, 30 years. Yes, that might be a great opportunity, but then it still gives people the mental relief knowing that there are so many other baskets in which their eggs are distributed. And when it comes to SIP, the kind of people who want to SIP are youngsters, are people who earn maybe 20,000 rupees per month. These are people who cannot go and say, I want to buy a bond of 10 lakh rupees. And these are the kind of people who should be SIPing, because it doesn't matter to them whether today they invest 500 rupees or tomorrow they invest 1,000 rupees. They need to just put away some amount of money. And as has been discussed in this channel many times, the length of the runway matters. And when you have a large runway, SIPing is extremely good for you, because you're able to go for a couple of years, for maybe a couple of decades even if you're really young. And that tiny amount, that trickle of droplets builds up to an entire ocean of retirement. When a youngster who starts investing at the age of 20, I'm going to be 20 very soon, and someone who starts investing at the age of 20 and ends their career at, let's say, 60 years old, you have a good 40 years to be able to SIP. And I'm sure you'll have enough opportunity to also lump sum invest in the middle. And what ends up happening is the length of the runway compounds your money which you've put from the age of 20, and you have a huge base of retirement for you to retire on. So that's one of the benefits of SIPing if you're young, especially.
And another thing which I want to touch upon is what Sashwath had mentioned. Markets fluctuate. In lump sum, you can get caught on the wrong side. But the advantage in SIPing is you smoothen it out. Markets go like this, right? In SIP, what it does, it's kind of, because it's a long-term value, it kind of smoothens your curve out. So all these dips kind of all even out over a period of 10 years. If we look, all the ups and downs doesn't matter. Your return kind of averages out to a very nice return, which cannot happen in lump sum. And he rightly said, in a consideration of SIPing or lump summing depends on where you are in your life, where you are in your career. If you're just starting your career, you're very young, you are not going to have opportunities to do lump sum. And if you think, okay, I will not SIP, I will sit and wait for my lump sum to come and then I will lump sum, Baba, you will not do anything. You will end up missing both. So if you are young and you cannot lump sum, SIP. You don't have an option. Same way, if you're very old, SIPing is of no use to you because they become too old. Exactly. You don't have the runway. So if you start SIPing, saying everyone's telling me I'm 45 years old, I'm going to start SIPing. You at the age of 80, I don't know. Yeah. If I live till 80, if you live till 80, very good. But I don't know what you do with that money at that point in time. So for you, lump sum makes better sense because your runways become so short. Your investments need to start paying you right now. So in lump summing makes sense for you. If you're in the middle, if you're, let's say, in the 30s, you're getting a few lump sums, you're getting some SIP you can do, then do both. Do a bit of SIP and do lump sum. And whatever you earn from the lump sum, SIP it again. So that way you double it. You are then actually the best. situation. If you're in the age of around 35, 40, between that age group, you have opportunities to get some lump sums and bonuses. You have opportunity to keep nice big sips. So your retirement can be quite golden if you hit it right.
And one thing which I had mentioned about the negative side of lump sum, which is that you get caught on the wrong end of things. Very easily, you can also get caught on the right end of things.
Correct.
And especially during the COVID fall, I've heard of a lot of people who saw that the market went down, they had some spare cash in their hand because they weren't spending as much due to COVID. They took that money, blindly put it into the Nifty 50, and look at them now. They're doing great for themselves.
True. This is also even true in certain equity which you've been suggesting,
Talking
about, such as ITC. If you had bought it when Anand Srinivasan was talking about it, you would have made quite a handsome return on ITC too. So it all depends on the opportunity and how you time it, and being ready to do it when you have to do it. It's always tough to say, no, forego today's gratification and postpone it.
Yeah.
It's very difficult because people find it hard to postpone by 1 week. If a movie is released, they want to go see it today. They don't even want to wait for it to come in digital. It comes in OTT. They're like, no, I'd rather go spend that 500 rupees. Spend on Uber 100 rupees, and then spend on popcorn another 300, 400 rupees. Spend 1,500 rupees. If you wait on OTT for a month or two, you can watch it for free. But anyway, that is something to consider if you're able to control your urges and need for gratification.
I also want you to add one point. I don't know how you frame it, but basically the idea that when the market corrects, when you SIP the same 1,000 rupees, it buys more of the market, and when the market is overvalued, the same 1,000 rupees buys less of the market. So that way, you buy a lot when it goes down, and you buy lesser when it's overvalued. So
correct. So another important thing which Sashwath was mentioning, which I want you to remember, is sipping can also be opened and closed like a tap. That it doesn't have to be fixed. So if, let's say, the market collapses, like how it did during the COVID times, when the COVID started, you can open the tap freely. So you sip more every month. Let's say then suddenly the market you feel is overvalued and it's not making any sense. That time you tighten it and you reduce the amount of sipping. And you can throttle and control the sipping. Why do you do this? Because when you use the same amount of money in a cheap market, you're buying more of the market. You're buying more of the market share. If the market has become expensive, that same amount of money is only buying a smaller segment of the market when you're sipping. So it is something to keep in mind when you're sipping. See the opportunities. If the market is very cheap, try and sip some more. If the market looks very expensive, maybe you can sip the regular amount or maybe even reduce the sipping. Anand will always famously keep saying, invest your coffee tiffin money. Or if the market is cheaper, he'll say, put some lunch money. He says, we have not reached the point where we open our war chest money as yet.
Yeah.
But maybe that opportunity will come and Anand will say, you guys go loose, cut loose, enjoy it because the markets are very cheap. That day will also come because markets are very irrational, as we have always seen.
And one of the biggest cases for lump sum, which is that a lot of assets require a lot of principal, which you need to put out right then and there. So like your bonds, which have a face value of 10 lakhs, even if it's trading at a discount of 9,80,000 rupees, you still need to put that amount of money in. And SIPing is not going to get you there, but lump sum does definitely get you there, and it guarantees you handsome returns when you're able to lump sum at the right time. So something to consider is that you might want to save up. You might want to SIP into a safer asset, something which doesn't fluctuate as much for lower returns, and work your way up to be able to buy that larger asset in a lump sum way later on.
Correct. Please do remember, we are not licensed to advise you. We are not SEBI registered as professionals. This is purely our understanding of what we think and our purely intellectual conversation we're having with you. Yes. If you feel this is something you need to investigate, please talk to an investment manager. Please talk to someone you trust and find out what is right for you. Just don't take whatever we say in these videos verbatim to be true. Please find out what suits you and fits you correctly. We only have these conversations to spark some interest, to get you thinking. Thank you today for joining us on Be Rich. I hope you found this discussion about sipping and lump summing interesting, and we wish you the best of luck in your road, whichever you decide to take. If you do wish to feel like share what you're doing, what your strategies are, please do feel to share it in the comments below. Me and Sashwath do read every single comment, even the ones which are critical of us. We do enjoy reading them all. So please do share your comments down below. Thank you again for joining us today on Be Rich. Please subscribe to our channel and turn on the bell notification icon. So every time we come up with a new video or a new content, you're aware of it. We'd like to thank you again today for joining us on Be Rich.
Thank you.
I will be in Kuala Lumpur, Malaysia on the 11th of June this year. That is a Sunday. I want to meet you guys at Sheraton Imperial Hotel between 4 p.m. and 7 p.m. on that day. The Sheraton Imperial Hotel is in Jalan Sultan Ismail area near Quill City Mall. The Kuala Lumpur monorail railway station is available nearby. You can meet me there. For further details, you can contact us on the WhatsApp number below or send us an email at the email given below. My team will contact you at the earliest. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.